Markets looking rough, lots of red. So of course we're gonna talk about it because I wouldn't leave you guys hanging like that. And you know I wouldn't pass up this chance for all these market crash views. So if we want to know what's going on in the market, then of course there is one man that can help us, Alex from Macro Ops. And he breaks it down in his latest report, The Art of the Deal. And that's actually not how it's supposed to be read. It's supposed to be read with SpongeBob in mind. Oh, the art of the deal. You know the meme, right? I don't know why he didn't attach that picture right here. Oh, and if you're wondering if this video is gonna be all screen share with none of my face, then you are correct, because you guys started calling me a fatty. Dude, you're gaining weight and look depressed. I'm doing just fine, and I'm not a fatty. I just like cake and ice cream and brownies and cookies, usually all together. I love sugar. And have I gained a little bit of weight? No, I've gained a lot of weight, but there is a method to my madness, I promise. I've told you guys about how I've been trying to get more and more into Buddhism. Well, this is a step in that. But when I decided I wanted to get more into Buddhism, I did not realize that I would actually start looking like one of these guys. See, I already had the big ears, like that was already there. But now this part, this midsection is really filling out. And really, we might have to just do more screen share videos because it is getting tough to fit into clothes, which is fine with me because honestly, I don't like clothes that much anyway. But like I said, there is a method to this madness. I'll explain it to you guys once I get through it and see if it actually works. It's kind of an experiment. And the experiment supposedly takes like 1 to 2 years. So yeah, I'll let you guys know if I'm still alive at the end of it. But this guy's happy, you know, he's smiling. I'm smiling too. But in the meantime, like in this video, just think of me as Hrithik Roshan. I actually do often wear sunglasses in the gym. So this makes complete sense. All right, should we talk about markets now? Because I'm kind of starting to get hungry. Gonna have to grab something to eat soon. But the first thing we gotta talk about is the Fed. So they came out with their decision to cut rates, right, by 25 basis points. Well, the market was not so happy about that because, as Alex explains here, the market is all about expectations. So even though the Fed cut by 25 basis points, the signaling that they were giving was actually hawkish. So that's why after the cut, stock prices fell. So what Alex explains here is that we live in a financialized world now, where the market tail actually wags the economic dog. It's just ass backwards. And this is just a result of all the crazy stuff we've been doing over the past few decades. And you know, financializing the market is not always good. Look at what happened in 2008. That's a big reason why we had that huge housing crash, because of all the crazy things that they were doing. But now the Fed needs to cater to the market as much as it needs to cater to the economy if it wants to meet its dual mandate of maximum employment and 2% inflation. So the market is just as responsible, if not more so at this point, than the economy in setting the conditions for the Fed to meet those two benchmarks. So the Fed is in a game where the market sets expectations and then the Fed has to meet them or positively surprise them, or they'll risk losing control. So now it's kind of where the market goes is where the economy goes. Their messaging and forward guidance was actually more hawkish, which the market doesn't like. So the market right now is pricing in 75 basis points of cuts by the end of the year. So the Fed, to make stock prices go higher, so the Fed, to make the market happy, needs to meet that or exceed it. By them cutting by only 25 basis points now and giving that hawkish expectation, that basically has a neutral impact on the market because that was already embedded in the prices. It was already expected. So it has zero stimulative impact, which is what the Fed is looking for. They're looking for that impact. That's why they cut interest rates in the first place. But now, as I keep saying, that impact is purely based on the market and what the market expects, not even in the real economy. So because the Fed failed to meet the market's expectations, that 25-point cut is actually having a tightening effect on financial conditions. To do a proper cut and actually loosen things, the Fed would have needed to exceed expectations, so go higher than 25 points and surprise the market. So they should have cut by 50 or more in this meeting to signal that they're aggressive and willing to cut rates should the data fail to get better. But they didn't do that, and that's why we're seeing the market go lower. And now we have stocks selling off and bonds going higher. That's not what the Fed wanted. But as Alex has been tracking, our indicators show that investors had become too bullish in sentiment and positioning already. So this sell-off was gonna happen, but this is just the trigger. All these investors' overly optimistic expectations don't match up with some of the worst earnings revisions guidance in 10 years, and stretch valuation multiples, and of course slowing economic growth. There's a huge mismatch. And then on top of that, you got Trump here escalating the US-China trade war. So there is a possibility that he's doing this to force the Fed's hand and make them actually lower rates because that's what he wants. He knows that that's going to send stock prices higher. And as Alex says, this will actually probably work. So the Fed is much more likely to cut in September again. But there is risk that the market actually prices in zero chance of a US-China trade deal coming together. And instead they start pricing in worst case scenarios, meaning further escalation and spillovers into other arenas from these trade wars. And you guys saw recently that China has devalued their currency like crazy. That's one of the side effects of this trade war. It's a way to get back. And Alex points out that the manufacturing base is already contracting, so we should see much lower ISM numbers here in the US in the months ahead, as well as companies planning to pull their investments in growth. So with these trade wars, Trump is basically killing business confidence even more, which could tip us into a recession. And in this case, there are real negative impacts from the trade war. You can see in this chart right here. It keeps increasing this year and becomes even larger in the years ahead. So with all this in mind, Alex is saying that this chart formation right here is looking increasingly like a broadening top, which means from here, Alex thinks we'll get more downside. And then after that downside, we'll probably chop sideways. Now for an intermediate bottom, this is what Alex is looking at. These are the same indicators that we always go over. First one is the percent of stocks above their 50-day moving average. This needs to sink below this 20% line. That'll give an indication that the bottom is near. Then we have this advanced decline line right here. We want to see more stocks declining, right, to signal the bottom, so it should reach below this green line right here. Then we're looking at semiconductors, which are kind of leading the market. They're already at their lower Bollinger Band, but they should actually trade lower from here. We need to see them put in a bottom and start trading higher before we can say that the bottom in the market is in. And then of course we've got our put call ratio right here. We need this to trade much higher, a lot more puts in the market, so this needs to go above this green line. That means more fear in the market and more chance of the bottom, because that's also kind of a sentiment indicator, and sentiment is kind of a contraindicator, right? I don't know if that's the right word, because when fear is high, that's when a bottom is near. When people are too optimistic, that's probably closer to a top. So speaking of sentiment, our composite sentiment index that we put together, we need that to fall below this red line right here. That'll tell us when sentiment is resetting and people aren't so bullish, because there needs to be that wall of worry to climb, right? But until that happens, we'll probably continue to head lower from here and chop sideways. Now I'll probably do a video next week with the 3 stocks for August, so I could show you how I'm actually playing these markets. And in that video, I'm gonna focus on profit targets, because those have really saved me. Because on this run up from here to here, we hit a ton of profit targets. And then what do? We took money off the table. And now, like looking back, I'm so glad we did, because we are giving a lot back during this down move. And that's how markets work. That's the whole reason you take profits off. You smooth out your volatility, and in case things really turn, you took profits. But I'll explain more about what I'm talking about in that video, which will probably come out next week. And you know what people don't care about market corrections like this? Value investors. Well, actually they care because they could find great deals. So if you want to see how our value expert does it, Mr. Bean, which again is not his real name, but fund compliance rules forces him to pick a name that is tied to legumes. But if you want the checklist that he uses to find his value stocks, then you can go to this page right here. I'll link to it down below in the description and comments. You just click this get it now, put in your name and email, and it will be sent to you and you can use it. So go get that checklist because it's free. And make sure you subscribe to this channel and hit that notification bell so you get email notifications when our new videos come out. We're publishing almost 7 days a week, some weeks, and you might even see my face again in a new video. From now on, I'm gonna do a bunch of push-ups before I record so I look super buff, because I know the only reason this channel is where it is because of my sex appeal. If I don't have that, what do any of us have? But it's okay, guys. I'm just transforming. I'm not AK anymore. I'm BBAK. Big, beautiful AK. Look at all this loving I got. Subscribe and come get it. And some market analysis too, if you like that. All right, subscribe and I'll see you in the next video. Stay fallible out there. Bye.